Hi, this is Joe Rabil from Rabil Stock Research with your Daily 5 today. On the show today, what I want to do is I'm going to go through and analyze 5 charts of the SPX index. And I want to start with the monthly and then work my way down to the hourly and look at the trend and momentum of each of the time frames. In addition, I'm going to analyze the potential downside in a separate chart. I'm going to analyze the downside of the pullback that's starting this morning. So let's go ahead and take a look at these charts. So one of the things I like about StockCharts ACP is just having the ability to see all of this on one screen. I've got my 5 charts. 4 of them are the same chart, only in different time frames. So the monthly is here, I've got a weekly here, I've got a daily upper right, and then an hourly here. And then I've got a few different things on the left chart I'm going to go into after I've gone through the individual time frames. But let's start. I like to start with a wide angle lens and then work my way down to the more timely time frames, the shorter term time frames. So let's just see if we can get any evidence of information from the bigger picture. And one of the things that I notice here, well, first of all, I think it's important to realize what's taken place. So I've got an 18 and a 40 month moving average. I've got an 18 and a 40 on every one of my charts. So if you notice here, we turned back in 2011 and we tested this 40 month moving average and held it. And then in 2016, we came back and held the 40 month again. And then in 2019, we did it again. And then I consider that basically a successful test in 20, even though it did kind of break it there. It was such a fast move, you know, down and up. It's a pretty good test. Another one here, another one here, another one here. And then recently, late last year, we tested the 40 once again. Now, this last time was a little bit interesting because we had both the 18 and the 40 right there. Okay. And one of the things, one of the patterns from my course in my book is something I call a pinch play. And what I'm going to do is actually zero in on, whoops, let me do this. You can zero in on any one of the indicators that you want. Another thing I like about this. So look at how we've got this little pinch where the MACD line is actually pinching into the signal line, which is rising. So we've got the trend line, which is the signal line, saying that the trend is positive. And then we get the little kind of work off our overbought condition by getting the MACD a little bit closer to the signal line. So this pattern I call pinch play, you know, essentially triggered on the break above of this low bar here. And we've had 4 months to the upside. Now, when it's only MACD that looks good, we don't have a lot of strength in the trend here. I typically look at it as a 2 to 4 bar move. 2 to 4 bar up move. Okay, we've got this big strong up bar and we've had 3 since then, and we rallied up into the big round number at 5,000. All right, always keep an eye out on these big round numbers, 1,000, 5,000, 10,000, depending on the index, anything like that. Those big numbers will come in. Even 100 in a stock or 500 in a stock is an important level to keep an eye on. So we've basically breached that, and now we're back below it after a 4 month move, which is essentially what I'd be looking for off of this pinch play pattern. So we've got some evidence. We've tried to break to a new high and gone to a new high and convincingly have done that. And the green DI has kicked in a little bit. I mean, I don't see anything overly concerning here other than the fact that it sort of has, this run has sort of played out. A 4 month move after the pinch play signal is what I would it's about what I would expect. Now, if we go and look at what's taking place on the weekly chart, we've got a interesting situation where not happening very often, where we were up 14 out of 15 weeks. This was the lone red bar, the lone down bar for the last 15 weeks. We go up and hit the big round number after up 14 of 15 weeks and 5 weeks in a row. And MACD, again, is getting up into that range. Now, I mean, it's not an exact science when it comes to MACD. It doesn't have like an over, it is an overbought, oversold oscillator, but it's not an exact level. You have to kind of look and see where it's run into trouble in the past. And each individual instrument will have a different level to be on the lookout for. But this is definitely what I would consider to be up in the overbought territory. Now, that's not an automatic sell or anything. It's just, it's something you need to be aware of. But the other thing I want to point out is look at the volume pattern here. You see the strength of the volume? The volume has been really good. The ADX has done a really good job of confirming this move. Remember, when we get a correction, and this is another thing that I talk about in my course, when we get this move here, which is a pretty strong correction, and MACD comes down to the zero line and ADX goes down to zero, I consider this a reset. We are not comparing this high to any new moves or anything like that. So I don't consider this to have been divergence at this point. We really want to compare from this point on. And so far, green DI is making new highs along the way. MACD is making new highs along the way. So far, so good from that standpoint. The problem we've got is we've been, and this is something I've been talking about with my subscribers for weeks now, is how this is getting farther and farther away from the 18-week line. It just, this 18 acts as a leash. If we get too far away from it, it'll tend to pull it back. And we've seen that in the past. Anytime you get too far away in either direction, it'll tend to pull it right back to it. All right, so something we want to be aware of, especially now that we're up in this 5,000 mark. But the underlying conditions really don't look that bad. To me, this would be more of a pullback. I don't think we're starting something significant to the downside at this point. If we are, it's only the start of it. And it's going to take a long time to top out, in my opinion. I just don't see this as, collapsing off of this pattern. There's too much strength going into it. And when I go and do my bottom-up review, looking at the individual patterns, there's still a lot of attractive patterns out there. Okay, let's look at the daily chart because this is where it gets interesting. So if you notice, first looking on the weekly, how we kind of jetted away from the 18. You see that this is the slope of the 18 and this is kind of the slope of the price here. We've sort of jetted away recently and we're not really that close to the 18 week as I mentioned. But if you look at it on the daily chart, we are now, this is kind of the controlling trend for me. I think this is the trend we need to watch the most closely because we're testing the 18 over and over and over again. Now, the key thing to watch here is if this 18 actually rolls over, if we break this line and cause it to roll, because that has not happened since this low. This has been since November. This line has been rising. So if we cause that to break and cause it to roll over, then we could be looking for this fill-in between price and the 18 week. You see what I mean? So if we actually break the 18 day and cause that to roll over, then you have to assume that that time frame has broken and that the odds of a deeper correction down to the next time frame's 18 is what the target would be. But the momentum conditions aren't bad here. We're not looking at something that's really all that negative. We've had a little bit of a slowdown in the momentum, but not significant enough to say, hey, we want to go short or anything like that. I think this is a pullback, a needed pullback after hitting a big round number mark after a pretty nice 4-month run. It's just a healthy thing so far. Now, if we go and look at what's taking place on the hourly chart, I mean, this is pretty violent off the top, but this is kind of what you'd expect after a 14-week run, 14 and 15 weeks, you run to the upside. I mean, in order to reverse this trend, we haven't actually done it yet. We're going to have to come down, we're going to have to move up, and then do this, something like that. So we've kind of broken the trend line, and that's the 1 in a change in trend. Again, this is out of my course. So 1, 2, 3 is what we'd be looking for. Some form of that, and maybe it goes down more before it forms the 2 and then comes down. But we want to watch the momentum conditions, which have not been bad up until this point. We do have some, the red line here is the strength of the sellers, and that has broken above the green DI. So that's the first time that's happened in quite some time here. I think it's worth noting, but the MACD is still above the zero line. I mean, we've got some work to do if we're going to top this thing out and reverse it to the downside. I think that's the most likely scenario that we go and correct maybe fill in some area between here and the 18-week. But again, I don't know that I'd be looking for something too violent. If we go and look at the fib grid, we've got this from this low to this high. We can see this is the grid that I like to use. So we're 38%, between 38% and 62% would be a normal correction. Most times we're going to hold the 50% mark if we're going to continue higher. We can come down to the 61% and still continue to the upside. But typically, when we're in a strong trend, we'll typically hold this 38% retracement, or maybe dip down to the 50% retracement just briefly. So just looking at that, we can see that the target area is somewhere around 4,700. That would kind of what I would be looking for if we are going to get a legitimate reversal from this high. Now, it's early in the week, okay? This is where you got to be careful. Right now, this bar looks kind of like a big reversal bar, but it's only Tuesday, right? So don't jump the gun or anything. Let the smaller time frames help you determine what's going on. Right now, we have our initial leg off the high. And it's possible this will just drop down and keep dropping down. And if it breaks the 18 in a way that causes that to roll over, then maybe we don't get the 1, 2, 3 top. But I would say 80 to 90% of the time, you're going to get some form of a lower high to form on the hourly here. But keep an eye on this key time frame, which is the daily chart. We have to see if this breaks the 18 and causes that to roll over. If that happens, then I think we're going to correct a little bit deeper. So I hope you enjoyed this segment. You can contact me through LinkedIn, X, or find my research on rabilstockresearch.com. In addition, if you'd like to learn more about trend, MACD, and ADX in multiple time frames, I am offering my book in a PDF format at a discount right now. You can go to rabilstockresearch.com/book for more information. Have a great trading day, and we'll see you next time.